Let's talk about two things that I bet you didn't know about investing during a presidential election year. All right, so this is pretty cool. In this chart, we're looking at some historical investment returns for the S&P 500 here in the United States. And we're looking at data going all the way back to 1932 up through 2022. What this chart does is it breaks down that time frame into two categories. One category is every year when there was not a midterm or presidential election. And then the other group are those, let's call them election years. And then from there, we're looking at how has the stock market performed in the beginning of the year, and then how has it performed in the second half of the year. So looking at the chart right now, this dark blue line, this shows kind of all of those non-election years. And you can see that typically from January through the first half of the year, markets tend to go up. I mean, that happens most of the time, but especially in non-election years, that's definitely the case. Interesting though, if we look at presidential election years and midterm years, you can see that typically the market's actually been more choppy, more volatile, and has been negative for the first half of the year during those election years. Interesting though, after the for the second half of the year, kind of the same story. Usually the market goes up, right? But in election years, all the more so. So definitely the typical election year, the market goes up, but the beginning of the year is usually more volatile, more choppy. So I bet you didn't know that. So what does this mean for investing and how might it apply to you? Well, it could mean a lot of things. That really depends on where you're at, which situation. Are you retired? Are you getting close to retirement? But one takeaway that I think is very important to look at here is that regardless of whether it's an election year or not an election year, the market typically goes up over time. So being a long-term diversified investor always makes sense. And I'd say that regardless of whether or not it's an election year or not, if you got spending needs that are coming up in a short period of time, regardless of how optimistic or pessimistic you are about the market, that money that you're going to be spending soon should be set aside in something very conservative and very accessible.